How was that pressure cooker for you in all this? I mean, it kind of sounds like fun, but there must have been some sleepless nights.
I'd say that period of time, um, when you're going through this, and then we're out raising that next round. Um, you can see the money starting to go down in the bank account, right? And raising money is never as easy as everybody thinks it is. Even if you're good at it, even like it's hard, right? And the travel and the intensity of it. And there's games inside the games that I didn't understand. So Kleiner, I think, was getting to the point where they were like, okay, kid, if you can go get that next round, that's fine. But what I learned of that is that how it works, and we never took the stereotypical sort of like Series A, Series B, Series C. I didn't really understand. I was like, at that time, there was just money flooring. I was just taking it, and so I think Kleiner had sort of figured out, said, well, you can go out on that next round. You tell them that we've got an option to put another 12 in. So I thought, oh, that's great. What I didn't realize is that, at the time, that your existing investors have to kind of lead the round, right? Or they have to commit to capital. And when other investors hear that, that they weren't committed, that sends a signal that they're not supportive. And if they're not supportive, the money gets difficult to come in. So I mean, I ran into that where all of a sudden everything was running dry a bit. Like people weren't coming in. I was like, what the hell? And then Mitsui stepped in, right? And then Mitsui stepped in a big way on the second round. And then Kleiner came in and the money all flew again. But I learned that as like, oh, okay, well, these Kleiner guys, they're like maybe not my best friends in the world. I'm going to have to be a little bit careful here because now I could see that, I don't run the show anymore, right? I'm the largest shareholder, but there's a board of directors. I still kind of have more or less control, but I don't have huge control. And now that I'm into this about like growing and spending, I'm always going to run out of money and I always have to raise more money. So at the end of the day, I'll only be able to raise money if my current investors are happy. If they're not happy, then I won't be able to raise money and then I'm out. That's how they get you out.
Wait, did you have to play this game? Because I always think about the trajectory of Agritrend, right? And they were the best, if not, one of the top. They were the best Western Canadian agronomist group. And you guys were the best variable rate, precision ag platform. You had all these different business models, but you're clearly a visionary that farmers found value in what you created for them. Did you, looking back now, must have been a fork in the road, the first financing.
Oh yeah.
Could you have just been Farmer's Edge and still been wearing that swag?
Yes. I think
you just didn't know. You got on the road.
Well, I think it was the fear of, and this is a little bit of farmers caused this to a degree, right? You at the time, we would have to re-sign the farmer up every year. And the farmer would always go, well, I don't know, I'm not sure. And then they'd always sign up. They just look like the torch. And at that period of time, because we went from a very profitable business to a money-losing business on an investment, right? And I'll give you, I think one of the things I was going to bring up as an example, like, so when we had to go to Kleiner and pitch this business in front of all of their partners, and one of the oldest partners in the firm voted no. And the reason he voted no, the guys told me after, was, he said, you can't give these guys $24 million. He said, they're not going to spend a penny of it. They're a bunch of farmers. I know people like that. They'll never spend any of it. And the idea was like, they have to give you money. You got to spend it to grow. And if you don't spend it, the business isn't going to grow. I like to say, man, boy, did I prove that guy wrong. I spent it like a drunken sailor. But it got to that point where you have to, the reason I did it was the fear that if I didn't grow, we get swallowed up. And looking back, that was wrong. We wouldn't have gotten swallowed up. the customers that we had are long-term customers. They would have kept coming back. But I was so terrified that if John Deere comes out with something, we're going to lose our best customers at Monsanto. So we have to grow, and so, which was fine. But once we kind of got into this path of like, okay, well, now we're building a platform, and now we're creating this, and now we're competing against Deere, and that now I'm in the fight. And then there was no going back then, because now you're kind of going down a path. You've got investors that have invested with a long-term strategy. They believe in your strategy and they're willing to put money in, and then you're on the wheel. And you know, okay, there's a lot of people that are very negative about capital coming into ag tech. You know, but the issue is that it's a hard thing to argue. Like, you could argue both sides of it. I can tell you right now, you know, with my Ronin business, you'd say, well, you don't need money, right? Okay, we'll go to the bank, borrow some money. I want to buy half a dozen trucks. Yeah, they'll lend you money for half a dozen trucks. You know, but you got to make a personal guarantee. And then once you get to a certain point beyond that, they don't lend you any more money, right? So you eat what you kill. Like, never mind going out and trying to create or build something, right? And so,
right.
Yes, venture capital probably isn't great to come into it, but if there's no other path to funding, and you know, I've been involved in some of these seminars or the FCC put together, and you know, and I I scolded all of them. I said, look, you've got BDC and EDC and FCC, you got, and one of the FCC bankers were there. I said, if so-and-so shows up at your doorstep and wants to create something really cool, well, you know, how are you gonna finance it? Well, I said, you'll probably give him like a line on his accounts receivable. Well, yeah. Well, what happens if that's fine? If he wants to build something interesting over and above with tech, are you going to finance him though? No. So then I said, who's going to finance them? You have no choice but to get an investor. Then the issue is where the challenge comes into is you have to communicate to your investors that your idea, what you're going to build, is going to grow and scale. And the challenge in agriculture is, how do you grow and scale it to get an investor really interested in coming in? And what I sort of said, you know, if FCC wants to make a big impact, if they say that these seminars I went to, the government's worried about our productivity, and how I've looked at it is, there's ways that you can support entrepreneurialism and inventorship and startups without having the gun to their head around venture. You know, and I know FCC is in the middle of starting a venture business. The question is, are you going to take the same playbook? Because the venture playbook is, we look at 100 companies, we narrow it down to 10, right? We invest into 5, and we make big bets, and we hope that out of that 5, one of them comes through. That's our. But if you don't have a path for growth, so you know, we make that first investment. If you don't come back with growth, you don't get your second investment. So you have to build this potential of growth to keep getting money to come in order to get. And what happens is that you get trapped. You're taking money in and you're spending as much as you can to get the growth that's required to show scale to get the next round. And then, but what's your alternative?
Yeah.
You know, because the alternative is, we'll just be happy with a nice small business. And that's okay if you're in a soil testing business or a custom combining business, or you've got like assets around it or whatever. But if you're in a technology business in agriculture, you have to hire 4 programmers, you have to build something. Well, you're going to have to go really slow, right? And you can't keep up to the John Deeres and the other guys. And it's a real.
Is that true though, Wade? Because what drives me nuts about your story, just listening to it, was I know a lot of the original players that you're talking about, because I worked with them. I sold them sprayers. I knew John Smith and Cam Henry and Tim Pizzi and all these guys, Mark Keating. I mean, the value was there for the farmer. And now when I look around, who is the real champion of variable rate, and how many folks are actually doing it to great effect as a percentage?
The difference at that time, we weren't really building tech, right? Like I had a agronomic variable rate consulting business using generally other people's tech or something pretty basic. We weren't creating anything.
Yeah.
Like if you think about, we created something that wasn't there. Like what we did is the ability of being able to get remote data from the tractor cab process. And now it seems like not that big of a deal or whatever, but there's really, at the end of the day, there's really still only two companies that are doing it at any type of scale, right? You couldn't do that without that investment, so that the argument comes at the end of the day is, would I have been better off saying, like, after the Avrio investment, just, having 1 million acres across Western Canada, profitable? I think about that a lot. I think about it a lot, and
but you're gonna do it right now. I mean, I talked to Marina. She said you guys are gonna go to 5 million or something. She said, I think, when I saw her at Manitoba Ag Days last year.
Well, she has big aspirations all the time, but yeah, I mean, look, the Ronin thing is kind of like redoing where we are, and what stage in life you are, and is there opportunities?
But let's not get ahead of ourselves. Why aren't you still at Farmer's Edge? I don't even know this story, really. Like, why aren't you still at Farmer's Edge?
Well, yeah. So I guess that,
is that the right question?
That last fundraise, right? So we're out going, and I got, our chairman of the board was Brian Hayward, who had a connection to Fairfax. And Brian, you'll find this story interesting. So Brian was also sat on the board of a big John Deere dealer from South Africa, who was the largest John Deere dealer in Africa, largest in Australia. Fairfax owned this business.
No way.
I've forgotten the name now.
It's interesting. Yeah.
So Brian was telling them about the things that we're doing. He was super interesting. And, Fairfax said, yeah, we're not really into investing into money losing business. It's not our style. We don't do that. We're not a tech business. Yeah, no, we don't. We know lots of companies do. That's just not what we do at Fairfax, Brian. We don't.
That's what I heard about them. I know nothing other than they don't lose. That's kind of what I knew of them.
Yeah, that's just not our style. So they're not big into tech, right? So Brian goes to South Africa. He does they get done the Fairfax part of it, and then the John Deere guys want to hear about this Farmer's Edge company. So Brian gives them a presentation. The Fairfax guy leaves, because he's not interested in this. Next morning at breakfast time, he's sitting with all the John Deere guys, and the John Deere guys going like, wow, that was so cool. He said, the guy goes, really? Like that? Yeah, he said, they're doing stuff like that John Deere's not really doing. We're actually thinking about seeing if we could get Farmer's Edge to come here and work with us here in South Africa. And the guy goes, wow. So then he talks to Brian and said, so then he gets back to Winnipeg. I get a phone call, and Brian said, Fairfax wants to meet with you. He said, which is a good sign. He said, don't hold your breath. They that they don't like these type of businesses, but they at least want to meet. And I got another call and said, oh yeah, just before I left, there's potential that Prem's going to be in the meeting. So have your A game on. Well, yeah. So get there, and sure enough, Prem's there. And, if you've never met Prem Watsa, I mean, he's a super humble person, and I've been to lots of meetings with him, and I've been in meetings where there's an introduction, and, he's got sort of his lieutenants around him or whatever. But when you're in the room with Prem and Prem talks to you, there's like nobody else out there. And he tells his story. And I've seen him tell the story 20 times, and he tells it like he's telling it to the first person, right? Like you are the most important person. And that man, the hundreds of millions of dollars he invests in all the people, but when you're in that room, when you're talking to Prem, you are the most, and it's legitimate. Like this is this is authentic, right? This is who he is, and he's just eyeing you up, and he wants to know the type of person you are, and super good. We'll talk about how the outcome ended up, but at the end of the day, I hold
Yeah.
no ill will to Prem Watsa, and if you're ever lucky enough to meet him, you'll
And
understand.
he chose you. He must have chose you.
He did. So he just said, look. So I gave him the view of where I thought the world was going. I gave him the view of where I thought this was important for insurance. At the time, we didn't have an insurance product, but I said, hey, I think this is and he was like, okay. So then we leave, get a phone call and said they want to meet again, which is Brian said, like, that's a really good sign. Like if Prem wants to be, you get like one shot deal. So we went back, and then Prem says, look, it's really interesting. And so at the time, how the venture capital works is that they invest into pref shares. And this is the really ugly part about venture, right? So if somebody invests $10 million into you, they get pref shares. So they get all their money back first if you sell the business, and then they get kind of interest on that money. So it's not really equity when you think about it at the end of the day, so
they're not doing you a huge favor.
Oh yeah, it's that part's not great. But Prem says to me, I don't like these pref shares. If I'm going to partner with you, we all have to be equal. Like, this is a really big deal for me, right? And all the employee shareholders and everything, because we're all under the pref. So he says, look, wait, this is the deal you're going to have to make. He goes, this is what I'm going to offer you, which was I think a really fair valuation at the time. He said, but you got to go talk to those Kleiner Perkins guys and sell them on this non-pref stuff. And I was like, oh God, that's not going to be easy to do. So we went back. I'd talk to Kleiner and say, hey, we've got a big investor. And at the time, we were kind of fundraising. We had Barclays was our banker. And so the Kleiner guys didn't know who the hell Fairfax was, right? Like Prem Watsa they didn't know who he was. And so the banker from Barclays had to explain, like, Prem Watsa's kind of like a Warren Buffett up there. And they wanted to negotiate with them. And the guy said, look, you don't negotiate with Prem. Prem makes you a fair deal. If you like the deal, you take it. If you don't like the deal, he moves on. You never talk to him again. And so Fairfax or Kleiner had a meeting. He said, look, we just don't do common shares. It's just, we can't do it. So he said, we got two options. Either you turn Fairfax down and keep looking, for your next round, or Prem buys us out. But we can't do it. We've gone to our port. So I went back to Prem and said, look, they won't do that deal. And Prem says, fine, then I'll just buy them out. So Prem bought Fairfax out, everybody converted to common shares. And it was a big deal, right? Money came in, Prem opened up his network. Now, at the time, I thought, oh God, I'm going to make this insurance thing work. And, Prem lets everybody do their own thing. Right. He'll make an introduction, but if you don't want to work with Farmers Edge, you don't have to work with Farmers Edge. Right. So we never got a lot of traction with their insurance groups. We got a fair amount of traction with other groups, but not with theirs internally, which was sort of weird. And then we were just getting down the path of forming a partnership with those John Deere guys. Then CNH kind of showed up on the scene, and we went down. So we couldn't do a partnership with that big John Deere group and CNH. And so then, we formed that partnership with CNH. CNH got super aggressive around, I'll call it a more stronger partnership, beyond. And, so Fairfax was an amazing investor. The problem with Fairfax, one, they didn't really understand this business. They hated it when we lost money, absolutely hated it. The idea of growth and which was always an issue to a degree. I think the issue that I learned with Prem was why probably Farmers Edge and Fairfax wasn't the best fit is that when you get on this path with venture, you're, and again, not that I knew this at the beginning, but you really have two outcomes, right? You're going down the path to be sold or do an IPO, right? You're never going to just build a big business, because the investment money is a pref, and there's interest on that, right? So you have to have an outcome. There has to be an exit.
It's just going to get flipped. That's the whole.
And I don't think I understood that much at that time, right? Like this is how it has to be. Once you get on this path, you are building to sell this company.
Were you on your own, or did you still have a business coach at this time, or who's your deal maker? How did this?
Yeah, and once you're there, then you're trying to figure your way through this, right? What's the right deal? How do you build this out? How long do you go? You've also then, we got to this point where we got so big, you're for somebody to buy it. Look, we had lots of knocks on the door, lots. Can't speak to all of them, but and that was a bit of a challenge.
Probably find it surprising, some of the names.
Probably not surprising.
Right.
You would say, oh yeah, that would make sense that they would, but it was big numbers, right? What I learned a bit with Prem was, and it was the blessing and the curse, right? Like he's so invested in this business, and he's funding you. And then when you get the knock on the door, Prem would like, oh, this business is worth something, like that's valuable. Like, so-and-so wants to buy it. So Prem would like dig his heels, and he'd want X amount more.
Was he attached to the ag side? Like, oh, I have something in farming, like a basic.
Starting to, because he was now
stuff of the earth,
acquiring, like he acquired AGT, the lentil business. So he was, he had the John Deere. He likes agriculture, right? So the challenge, I think, though it was so awesome that they invested, is you have now an investor that doesn't like to sell stuff. Like he's committed, he believes in it, right? So he's attached to it. So
did you miss the exit with the right partner? Because
I would say we missed a lot of exits because of it. Lots. Now, so in his way of thinking, right? And this is my strategic partner with Wade. We're only gonna sell this business if it's, the problem being is, in order to keep this business growing and attracting this attention, you're growing, right? The only way that a John Deere or CNH or an AGCO wants to buy you is that you're causing them some type of pain, right? Or a chemical company, a seed company, or something, right? Like we got to have that company in order. And the goal was get as many acres as you can, right? You gobble this up, you get, and so it takes capital to build the platform and that, and so Prem would give you, he would fund, and then you come to it, and then you kind of run out of money, and he'd fund again. Is like, he doesn't like that. But when you're getting the knocks on the door and somebody says, it sort of then gives okay, well, that business is worth that much. But there was always this sort of tension in the business about, so we probably could have exited out a few times before we got there. We were growing, and then we got to that point where we had enough size, we had enough reoccurring revenue, we had these partnerships with CNH and Richardson's that were paying off, and then COVID hits, and then the tech market gets hot, right? So the bankers are just, and the one thing, like, Prem has so much influence with the Canadian bankers. Like if he says jump, they literally say how high. Like he is, and so Prem calls me, and this is what a lot of people don't realize. I mean, and I don't think this happened to everybody, but I remember sitting at a table at a Fairfax event with a whole bunch of the senior of these companies, and these guys were saying like, "Oh, did you ever meet Prem before?" Oh, I met him one time. And they say, "Oh, no, I've never met him. I'd love to." And I'm going like, "Holy Christ, I've met him like 25 times or whatever." And it's like, I don't know if that's a good thing or not. Like,
sick of the guy.
I've been called into the principal's office like a lot. I'm the bad kid.
Yeah.
So the bankers start calling about like tech's hot. We should, So we went out kind of in the fall, as they say, to kind of get a, a temperature of the market. And the market sort of, the institutional investors said, super interesting. You're probably a little early yet. Come and see us next year. And so then, we got till like Christmas time, and then the market's just going crazy, right? It's just screaming for IPOs. The bankers are saying, look, I think we can go now. And then, Prem says, I've seen this before. The IPO market opens up and then it closes, and it might close for 3-4 years and never open up again. So then the decision was, the board said, look, if we're going to go, we should go now. The idea was, maybe it'll be maybe it'll be successful. The idea wasn't like, we weren't thinking it was going to be hugely successful. We just wanted will it actually IPO? Because that was a lot of companies go down this path and they just don't get traction, right? People aren't interested. And so it was, the amount of experience I got with bankers, like the amount of investment bankers that I've been in touch with in this period of time is unbelievable. There must be about 10 different bankers. But the one thing I always found with the bankers is that they're always after their next deal, and they don't really understand the business all that well. And so one of the things that I had said to the bankers was, the things that we're working on, insurance is one, financial services, but this new opportunity inside the carbon space. And what we do is going to make a huge impact in the carbon space and agriculture. Like it's connected to the idea of traceability, but at the time I could see what was coming around the industry being focused on the amount of energy was going to be used in order to make a bushel of grain. I said, we have all the data to do that. And so when we were getting ready to go out, the banker said, no, that's bullshit. Don't talk about that stuff. Stick to the core business. Don't bring up anything around carbon. And I said, look, I really think that's a mistake. But so, rumors go around about within the finance world that we're potentially doing an IPO. And I get a phone call from the Kleiner Perkins guys who are now out in business. And Brooke says to me, hey, man, it's been a long time. He goes, I hear rumors you guys might be doing an IPO. And I said, well, you might be right, but I can't really speak to that. But he said, look, if you are, he said, one of the reasons that we invested into Farmers Edge was the fact the work that you guys were doing around the conservation tillage protocol. And at the time, we were working on, because Alberta was going to come out with the nitrous oxide protocol and about the data set. So the reason why Kleiner invested, part of the reason was that Al Gore was inside of Kleiner Perkins, and he had told the guys, in the future, those nitrogen reduction protocols are going to be the future of agriculture, and if Farmers Edge can get all the data and stuff, that's super important. So the Kleiner guy says, look, you got to remember why we invested. You need to communicate that out to the potential investors, because that's what people are interested right now in the industry. He said, take that advice. So I went back to the bankers and I said, look, I talked to the Kleiner Perkins guy. This is what they're saying. And so the bankers said, we put one slide in the deck talking about what we were going to do in the future, not what we were. And IPOs are all about what your track record is, right? Well, Farmers Edge was built on what we were going to do, and specifically around carbon. And what I had one slide and I said, look, all this data, and if you believe that the market's going to be, that carbon's going to be important, you're going to have to be able to guarantee of all the management practices that you've done and how much carbon, how much energy you use to create this bushel of grain. It's going to be critical. And I have all the tools in order to do that. And after the IPO, I'm going to start a carbon business and I'm going to go do that. So, 2 days into the roadshow, I mean, we're here. It's hard to describe a roadshow, but it's like 130 investors, right? And you're just having calls every day. The bankers come back and say, we've seen an interesting trend that the institutional investors are really intrigued with this carbon thing. That's what they're interested in.
Really?
And I thought it was interesting because they didn't know, they talked to these institutional investors. They didn't really know what they were after, right? Like, if the if I didn't use, well, the Kleiner Perkins guy said you should do this, it wouldn't have got the slide in the deck. And, that was one of the critical things that made the IPO super successful. And so after the IPO, we had to go to work and build a carbon company. So we went out and created these two protocols on the Canadian exchange, CCA, and one was essentially taking the Alberta tillage protocol, putting it for Saskatchewan and Manitoba, and then doing the nitrous oxide, tweaking it a bit. And then we created 600,000 tons of offsets, and in a year's time. And what I learned from that was nobody had done that. Nobody in the world. And the reason we were able to do that was because of the data. And so if you see a lot of carbon companies out there now, they talk about their MRVs and stuff. Well, really an MRV is nothing more than a glorified spreadsheet. But the power of the MRV is attached to the farm management software, the data, the soil test, the as applied, all of that stuff. The MRV is not that big of a deal. It's what kind of pushes, the data gets pushed in, and then the third party verifier is able to verify that this has all happened and certify the offsets. But that's what the power was, right? And the Indigos of the world and all the other carbon companies, they don't have that piece, right? And so, and going down the road in the future, like a John Deere, in my mind, John Deere is going to be super powerful in this space because they're going to have the ability to get all that data and be able to create the carbon offset. Well, this was sort of going on. We created these carbon offsets. We sold the first offsets to Maple Leaf Foods. The guy from Maple Leaf Foods said to me, we really love offsets and we're one of the biggest buyers. But what we're really focused on is insets. And I was like, well, what the hell's an inset? And so essentially all the same things that you do to create an offset, but you do it within your supply chain. So if you're Maple Leaf and, if they're going to buy barley from the farm to go into the feed mill, if you're doing variable rate or no till, instead of creating an offset, you create as an inset and they give the farmer a premium and they get to claim that. And I was like, holy shit, that's awesome. And that guy from Maple Leaf said, look, we're ahead of the curve on this. Michael's, this is a big, this is important for him. But he said, all the food companies are going to do this way, all of them. And so then I realized okay, well, now it's not just offsets, it's insets. And so then I started to go down and I, of all the work that I did, creating these partnership with the Richardsons and the CNHs, now it was talking to ethanol companies. And, we created this partnership with Gevo and and so suddenly now you could see the opportunity around with the farms that they're going to be able to create value, not just from offsets, but insets. And the one thing that I learned is that if you ask a farmer, what would you rather have? A carbon offset and get paid, or would you rather have a premium on your grain? Well, 99% of them are going to take a premium on the grain, but it still was all this data. And so we had done all this and things were going well. I mean, the problem that we started having inside of Farmer's Edge was that, we had an expectation of growth and we had, here's our expense. And so we weren't overspending. We were kind of hitting our numbers on how much we should spend on our costs. But when we were missing our revenue targets, well, suddenly if you're missing your revenue targets, you're going to start to run low on cash. And we had enough money for about 2 years to get to break even. Well, now that break even goes from 2 years to a year and a half. And so the analysts are saying oh, you're going to start running out of money. You're not hitting your numbers, and so the share price starts to go down. We came out at 17 and went it to 21. It softened back down to, 11 or 12. There was lots of, I would say, investors were calling that, didn't come in at 17, but 10 sounded a lot better. Board was very focused, hit your numbers. and we'll be okay, right? The rest is just noise. And they probably weren't wrong on that. I mean, but at the end of the day, we were just struggling. We just, we're missing our targets every quarter, not by a lot, but enough. And so the pressure on the share price just kept going. And, the analysts who were super friendly at the beginning became less friendly. And one of the main things that I learned from the IPO, it's not the institutional investors who were putting pressure on the shares. The institutional investors would phone me, yell at me. I would tell them kind of where we were at in the vision. They'd say, "Oh, that sounds great. You need to communicate that out into the marketplace." But the day traders, right, the ones that would jump in and jump out, and the analysts, and that was putting the pressure on the share price, because there wasn't a lot of movement in shares. But the institutional investors that took big positions were getting pissy, right? Like, I bought at 17 and now it's 9. Do I buy more and hope that this goes up? Or, when do I jump out? And, what's, so, I think at the end of the day, my gut tells me that probably the investment bankers got to the ear of the board and said, I think the Forum Boys had his chance. Now it's the time to bring somebody else in with a bigger brand. And I, and at the time there was lots of really, really good things that I felt were cooking there. It's kind of like an NHL GM that, you make a lot of good draft picks and trades, and, we're losing this year, but next year we're going to have a good run. And they just don't give you that time. And, you're the head of the ship, and accountability falls onto your shoulders. And, they brought in an Amazon guy, though, they hadn't brought him in yet. I think the idea was they thought the markets would take it as a positive thing.
Yeah.
And they did. It was a neutral when they announced that I was out. The share price was hovering around $3, so it didn't go down, it didn't go up. They sort of a wait and see approach. And then when they brought the new guy in, and he did his first analyst call, I think the markets didn't take that well. I think they went, "Ooh, this guy doesn't know all the stuff that way." This is how I perceive it, and then the share price really started, and I'm essentially the second largest shareholder. I'm kind of out. I was sitting on the board at the time, and, there was decisions that were being made that I didn't think was great, but so I had to either I'm on the team or I'm off the team, and I had to make that decision. So then I decided to kind of, resign from the board. It was.
And when did you resign? When did you resign?
Well, they went to me in February, said I was kind of out, and then by end of March is when we made it.
What year are we talking?
2022.
2022. So how was that for you? I mean, the company that you started at a double diamond. I mean, and John Smith wanted to invest in you.
Yeah, it was hard. It was you go through a lot of different looking back. I should have just said, "Look, it is what it is. I'm done. I'm going to sell my shares." Because once, because I was unable to sell any shares as the CEO. I was in a long-term lockup.
Right.
Once you're not the CEO anymore, you can sell the shares.
So they track all the insider selling and all that, and
part of you goes, maybe I can't do this. Maybe they bring this other guy in. Maybe that will, it's Amazon. It's a big name that, I kind of thought the share price would bump up too, right? And so you want, it's kind of like a weird thing. It's a huge issue for all the employees, right? This turmoil. And so you try to make it calm, and try to get everybody, and so probably the hardest part was knowing you're kind of gone. Then the announcement comes into March, and then they say, "Oh, but he's going to stay on until they bring in the new guy." So you're essentially a lame duck for 4 months, right? Yeah. Then what I learned is, then it turns into fucking turmoil, right? Because then everybody's like, "You're not really my boss anymore," right. and everybody's at each other and panicking, and it's, I wouldn't say that probably they shouldn't have done it that way. I mean, so, yeah, it was really weird. It was very hard. It was, I've not dealt with, luckily in my life, any type of close deaths or anything. I had, never dealt with any of that, but this was like a death for me. It was really, really hard. It was weird. And I think looking back, probably the best thing for me would have been is like, okay, if I'm out, I'm out. Done. See you later. Move on. The hanging around was like really hard. Yeah. And then, you kind of, the new guy comes in and you're trying to be supportive, but you're not sure, like, holy man, we're going in a totally different direction. And then the new guy's got to justify the new direction, which essentially is, well, all the other stuff the old guy did is all fucking bullshit. And I wouldn't say that they tried to do that, but how else do you do it? And I'm on the board, right? So it just got way too awkward and weird. And and I just had to leave. It was driving me crazy. And
it must have been a really tough time, man. That's incredible.
Wanted to be super successful. I wanted the guy to come in and do great things because of the share price. But there's also a part of me that didn't want him to be successful too, because then it was like, it was like a weird thing. It's like,
of course.
But yeah, so I could have sold my shares out. The share price was going down, down, down. And every day I'd wake up and say, can't go any lower than it did yesterday. And every day it went lower. And so then it was like, then it got so low where it's like, oh, well, I might as well just play it out now. There's no, I think I've done that on the canola market. So yeah. So then
you're like a farmer who didn't sell his canola.
Yeah.
Oh, so the emotions, that must have been crazy. And I totally get why you would want to hold on. Wait in. I mean, I can see the roller coaster. I think part of the problem too is trying to marry that beast that is agriculture for those of us who grew up in it, to try and translate it to the public markets where it's hard to conform it, isn't it?
Well, the part was now, when I talk to people, insiders, right, from other companies, we had at one time $35 million of reoccurring revenue. And when I would say some of the big guys have told me that we were nowhere close to that, like internal their own companies, right? Like, but it's being hidden in selling equipment or selling seed. We were doing very well, I would say, compared to our cohorts in the marketplace. The issue is that when you did the IPO and you sat down and said, like, look, we've had all this growth. I expect this growth to continue. And we were growing. We just weren't growing at the rapid rate that we thought we were going to. So, it wasn't terrible, but the share price was suffering, right? So in the end, you look back and go, what the hell happened? We were not doing that bad.
Yeah. Expectations are just so high, maybe, hey?
It was...
You oversold it.
Seventh most successful IPO, right?
Too good of a salesman, Wade.
There was $1 billion trying to get in. $1 billion trying to get in. And we were only, raising 130 at the time. So I think at the end, my view would have been, I think there was a good strategy there. We should have raised a bit more money, and I think the share price would have recovered. I believed it would have. Would have gotten back to 17? Probably not. You also have to remember that almost all of the IPOs in the tech, regardless of agriculture, got crushed after, right?
Yeah.
So everybody lost 80% of value.
Yeah.
So it's the market. The market heated itself up. We took advantage of the market, but at the end of the day, it doesn't, you have to ask yourself, are you a bad CEO? Have you done everything wrong? I would do, just lots of things I would do differently. I mean, there's some things I'm super proud of what, not just the IPO, of what we did in the industry. I think we did we made, significant impacts into the industry. Um, there is lots of things I wish I had to do over. Would I, at that crossroad where I could have just stayed as a smaller company, with that first money from Avrio, you know, um, do I wish that? Parts of me wish I would have stopped, but also parts of me goes, did a lot of amazing stuff, that I think impacted the industry. So would I give that up? It's hard to say, there's things that I did as the company grew, and it was relationships that went away, and some of it that it's their natural progression. There's stuff there that I regret. Some of it is that I regret but didn't have a choice. It was an unbelievable roller coaster. We had, you think of it at the time, we had some of the biggest investors on the planet who invested, Kleiner Perkins, who invested into Google, right? John Doerr is they call one of the most famous venture capital investors in the world. We had David Thompson. We had, Fairfax, Mitsui. Like, it's a big deal, but it was. I learned a lot. I understand better now why investors are always more prone to invest into entrepreneurs that have already done this once. Because I look back to what I know now to what I knew then.
Yeah.
And it's like, oh my God.
Yeah. You got to forgive yourself for a lot of that, because it's just like you say, games within games.
So yeah, it ended up in the end not to what I'd hoped. I tell people at one time I think I had $28 million of value when the IPO went out at $17 a share. I think ended up selling my shares when Fairfax took the company back private. I think it was 30 cents or something like that. So not, not that great, but
Oh, wow. That is such a wild, wild story, man. But I'm wondering a little bit too. It's just an incredible story, but Wade, like, talk about Wade's edge, like your edge, your ability to figure this shit out, put it together. And I'm kind of wondering where all the farmers ended up in this, because I guess that's where we start to segue to talk about, I guess, yeah, they went private and this and that, blah, blah, blah. You could probably read all about it in the newspaper, but you have this ability, you have this natural ability, and it is creative destruction. Maybe not everything turned out the way you wanted it, but look at the things that you were there at the advent of it. You talked about VR, you talked about the whole weather station and data collection from farms, and where this is going with this data. You see it all: insurance, carbon, commodity. Like, the whales they're moving it. They're like, this is where the whales are moving in the commodity ocean, right? Wow.
Well, I just think, unfortunately, Farmer's Edge hasn't gone, the path that I would love them to go. But if you think about now, and if anybody has experienced ChatGPT,
oh man,
how shocking it is, right?
Oh God.
If you think now of those data sets combined with AI, right? That to me would have been the most powerful mix. And and who are going to be the winners out of this? Oh, John Deere. John Deere is is because they've not stopped, right? And they're the only one that has access to that data set better than all of their other cohorts. And they've been very strategic about this path. So I think, the power, the things that I'd hoped we'd been able to do with data now, with what I see coming with AI, I don't want to say the word scary. It's there. An element is scary.
I feel it.
But
I feel
power,
it.
just the power of it.
I think everything's going to be so different so soon that we can't even. I think it's going to be good. but I also think of Sarah Connor, fairly
Yeah.
often,
Yeah.
in a bunch of contexts. But, one is, I was thinking about Tesla's Optimus and how wonderful it's going to be, when you have a robot that mows the lawn and can raise a puppy and guard your home, and it looks like Scarlett Johansson. But what if somebody hacked that robot, or it decided certain things that were best for you? But anyways, that's fairly off topic.
No,
but
it's I think now the power of the data set that's coming. I think the challenge is that very few companies have enough data that they could do something with it, and I think John Deere will, because they're so complete, right? And especially with some of their dealerships that are connecting that agronomically, and I think that the farms and we haven't got into the car. I depending on what happens with the orange-haired guy in the US and
Right.
around biofuels and carbon, where that's going. But I think that's another powerful piece, right? And I think field data, I think we kind of went through this. Data's so important.
Right.
Nobody was able to do anything with it.
Right.
Now I think you're going to see the importance of farm data and what's going to happen with it, and which companies are going to be able to do something with it. I think that's yet.
But you could have done something different than John Deere is going to do with it. No,
oh yeah, we would. How I think about it now, the path that we were going down, we would have been a viable alternative to that. I think what will make Deere so powerful is their access to the field data, right? That they compared to what else is out there. Look, a lot of the other companies have awesome presentations and cool commercials, but they're not getting the data in a way that is going to be impactful. And Deere has been doing it for so long. And, you can go and see a farm that's all red and brand new equipment. And if you went and talk to those guys, hey, are you collecting all your data through CNH and doing all this? I would say majority of them would say, no. If you go to the John Deere guy, right?
Yeah.
Say, hey, a lot of the John Deere guys are because they've made it easy, right?
It's beautiful. Yeah. That 2600 is pretty nice when they came out with it in the day. Man, where were the producers in this journey, with Farmer's Edge? Where do you see them now? Because a lot of people liked the variable rate, and then they liked the dongles, and they liked the weather stations. The weather stations were very popular.
It seems that Farmer's Edge has gone in a different direction. Less focused on the farmer, I would say, trying to be more a B2B business. I think they're trying to, in a very scaled down version, and I think that what I was trying to do when I was there was, provide enough touch to the grower, because, but then still make it technology. So
that was a big challenge for you guys, was just touching the farmer enough.
And so now you're so far on the tech side that, I would say that, 5 years ago, if you talk to a farmer, some farmers would say, Farmer's Edge isn't close enough to the grower anymore. And I'm now working with my local guy, and I like that better. Some people say, I really like the technology. I don't really need a Farmer's Edge guy out there all the time, but I'd like to see them more, but it's enough.
Yeah.
I would say now probably, 9 out of 10 farmers would say, I just don't see my Farmer's Edge guy enough. I don't really know who they are. I don't,
it's all virtual now, isn't it? They don't even have.
I think they're trying to get to that way.
Real.
I think it's left an opening in the marketplace, and
isn't that what you're doing now? Like, isn't that the masterless samurai just sliding in where he used to command armies and he used to be conquering nations? Now he's just skirting along the rooftops of the night and finding his way to the next
Samurai
opportunity.
without a master. Yeah,
I love it.
absolutely. And that you kind of, I have a mixed emotion about all that I went through there. Right.
Sure.
It's like,
Oh,
I could argue the good and the evil of raising money. I could argue both sides of it. But when we started, a bunch of ex Farmers Edge guys started Ronin, that, a little bit, we're back to our roots. We don't have a tech platform we're using. There's certainly a segment of the marketplace that is looking for a higher touch, and hoping to kind of grab that, see the opportunity of where that could go around a carbon business down the road. So I've created a partnership with a group in the UK, a big retailer, to potentially be able to create carbon assets. So looking to go out and raise a little money alongside them to see where that could go. I believe that carbon assets are going to be a lot of value. I think with all that's happening in the biofuel market and the SaaS with the stable airline fuel, so we'll see. Number one, though, is that, farmers have to have good data on their farm. And if they're going to have good data, they need somebody there that's got touch with them. Because the one thing that we've all learned, you could have the best app, but the farmer, if he's, 90% of the farmers won't go through the effort of putting all the data in a way that you can create that value out of it. That might change when they're starting to get big money for it, but until that happens, they're farmers. They're busy. They're doing stuff, and so if you can provide a good service to them, help them with this data thing, and down the road, if there's an opportunity around creating value out of carbon and they've got all the data, great. If there is no, then there isn't. But I think number one issue, we're on about 350,000 acres now with Ronin, so not like with Farmers Edge, but got a nice book of business. That hoping that will grow. Maybe get to 500,000 acres, and that's a good business, and a good foundation, and not looking to turn it into 10 million acres and reinvent Farmers Edge, looking to have a good business and work with good people. And it reminds us a lot of the time before we went down the path of Farmers Edge, the good times. But yeah, it's been a quite a roller coaster ride. And there's been lots of real good and lots of real bad, and but would I change it all? Yeah, I do some things differently, that's for sure, but I would hate to say that I wouldn't do it over again.
Creative destruction, man. That's life. It's all just market research, and we all get humbled. We all get humbled all along the timeline. You had the balls to do something that takes a lot of chutzpah to do, and you learned a lot. And yeah, I mean, we'd all have things that we would change, but I wonder a little bit too if we don't find out along the way, like all those things that we thought would make us happier. You kind of look back, and here you are at your roots, just doing what kind of interests you with people that you enjoy working with, and it's not really that much beyond that. I mean, all these big games, like once you get caught up in all in these big games too, you probably lose yourself and sort of get caught up in it.
Well, you learn, you evolve. The one thing that I would say over the time of Farmers Edge, the people that you get started with, and as we were going, you have to evolve, and so there was always this piece of some people, might have thought they got left behind, but part of it was
right.
They were like, look, I don't want to be on an airplane once a week flying all over the world. But if you don't do that, then you don't get to that next level. So, and all those people are important. So there was always people that were very, very important pieces at the beginning, and they became, not as integral down the road. And a lot of it was just, that was their own choice, right? They were like, they didn't kind of have, like, we're all no different. I literally had to kind of, today I could go sit in a room with 5 investment bankers and, know exactly what they're talking as I've lived it, when I first got started, it was all like Chinese, and other than having Anita beside me to translate for me, I would never been able to do it, but I had to do it. The amount of reading and like I had to work harder than all those other guys because those guys they all had an MBA from somewhere, right? They were all, I'm just a farm kid with an ACC. Wait, where did you go to school? Well, I went to ACC, took the agribusiness diploma.
Community college on Richmond and Brandon.
Yeah, these guys, they're I have my MBA from Harvard. Yeah, all right. Well, I think you might be a little bit smarter than me.
If you took them to the farm, it'd probably be like taking them to the moon, really.
Well, that was some of the asset, because I knew something that they didn't know, right? Now, a lot of these investors they learn about agriculture, and I had to learn about finance. And then it was the whole thing of like, why we're doing this, and that whole, what our mission critical and our goal was, and it's
right.
It became a big organization. They got to as high as 500 people. So,
well, it seems to me, you tried to evolve, but in that, finding the right business model and timing too of everything that you did. In some universe, you did all the right things, and if you'd just taken that right exit or had things, just a slight off ramp or whatever, it would have been a vastly different outcome. But that's a pretty epic story regardless. Wow, good for you though. Like, I always looked at what you did and I thought, like, oh man, like there's a guy, you went to the moon and come back. Surely it makes you a better man for it though. Like to reach those heights, be worth whatever X amount of dollars and then come back down. Isn't that?
I can handle stress quite well now.
Nothing's a huge deal. Like the volume got turned down on everything.
Well, I just, when I go to the farm, and my brother gets super stressed out about things, right? He looks at me one day and says, like, don't you get stressed out about anything? It's like, Brad, this is nothing. Oh, the header broke. The header broke down. Like, we're gonna go to John Deere. We're gonna spend $800. We're gonna fix it. It's like this is not. Yeah. It's all right to experience some of this where it's like super stressful, right? And there was lots of hard days. There's no question. There was lots of really stressful and finance, and you're trying to get to this place, and you have it. Sometimes there's a goal, right? And you can see it. And I would say that the one thing that I've been good at seeing where the play develop before it develops, going to where the puck's going. I would say that some of the challenges there is that, we would get there and a lot of people say, what the hell are they doing? And then a year later, all of a sudden some things come together and people go, oh yeah, now I understand what they were doing. So yeah. So it's very hard to go into an area that's early. And now in saying that, it's also very hard to go somewhere early if you're with a big company that doesn't allow you to do anything, and that was one of the things that, if I would have been inside a big ag organization, I'd been a good employee. But you never get a chance to do anything, right? You don't get a chance to dream and take a risk. And if it fails, you pick yourself up and do something, not something that I would say I feel very fortunate about, because, with all my experience, all these big companies, so many super smart people in those organizations, but they're never really allowed to do much. They don't have much rope. They can't, because it's like, as soon as you make one mistake, the threat of being fired. Farmer's Edge, I made a lot of mistakes. I didn't get fired, till the very end. You just do, right? And you figure it out.
Damn. Oh man, and there's other things I think we could get to, but I don't know about you, but I think that's epic to hear your story. And
that's 3 hours. That just flew by. Yeah. I can't believe it.
I think you needed to tell that story. And I think, frankly, a lot of people would be surprised to actually hear it. And it's something about this format too. I mean, you might hear this or read that in the news or just pick up a snippet and form a lot of opinion in the absence of the connecting tissue of threads of how one thing leads to another. And I'm sure if anybody is going to, I know it's going to be probably a 3-part series here, but I feel also like I do want to discuss more with you about what you're doing next and the whole carbon thing. But I also feel like maybe that's a future collaboration on our platform as far as
yeah.
like a web, like we could do
I just didn't think this would take 3 hours.
Well, and I think it's good. So I think we'll probably leave it there for now, but I think in the future, I'd love to hear more about what you're doing with agronomy and the carbon and how you're continuing to move these ideas. And, you know, we're endeavoring to bring more different kinds of content to producers going forward on this platform. But I think, you know, just telling your story on the podcast, I think we should leave it there. I mean, you've got the story of how you met your wife too in Ukraine and came back and, you know, I mean,
we can have 3 more of these.
I know, and maybe we should, but I think for now, that's probably lots.
Well, look, I appreciate the opportunity to speak about. Like I said, I've never really ever talked about this, you know, publicly or on a podcast or anything like that before. So
I think you needed to tell your story, man. I think you need to tell your story like that. And now it's in print and it's out there for the world to hear. And what you built and what you went through and the story, I mean, it's epic. And now you can kind of look back and like you say, you're probably cool hand Luke. You can go out and do what you enjoy and probably not be too bothered about, you know, things relative to what you've gone through and just have some sense of gratitude that you're healthy and happy. You got a beautiful family. You can go to work doing what you love in an awesome industry and just appreciate that with the perspective that if you never had that experience, you wouldn't have that perspective. You might be like, oh, I'm doing the same thing I did for the last 30
100%.
years. Like, now you're like, this is the best part. I love this. I'm grateful just to do this, right?
No, 100%. I mean, look, I there's no sense complaining. I got to do things that a lot of small town kids would never got to do. Maybe the outcome ended up not being what I wanted, but you know, it was a wicked ride.
Yeah. You might be miserable in a mansion anyways if you're stupid rich anyways. And
exactly. That's how I tell myself.
That's what you tell yourself. That's what you tell you. I'd be miserable in that mansion anyways. No, life's good. And hey, man, I respect you. I'm proud of you. I'm so proud and honored to be able to tell your story like in this long format. I'm going to do you justice. I think a lot of people will be really interested to hear your story. And that'll help set the stage for whatever you're going to do next, which I think it'll be great. I mean, anybody who wanted what you've been talking about all through this podcast, I'm sure there's a lot of farmers that are listening that are thinking like, that's right. You know, variable rate. And I want that. Everything you talked about, I think people want. So you coming to the market and bringing it again on the right scale with a little bit more experience is going to be,
and
awesome.
More personal touch again. So
yeah.
Look, I thank you for inviting me. I know you've been asking for me to do it, and I've been, you know, saying I was gonna, but I've been avoiding it and stuff. And
it's timing, you know.
So I appreciate you giving me the opportunity. So thank you.
Let's stay in touch. I'd like to collaborate more. But thanks a lot for coming on and telling your story in particular today. It was awesome. I'm sure people are really going to get a lot out of it. So good for you.